Welcome everybody. This was quite a day for earnings with 3M. We'll talk about the disappointments first. 3M, and then you had UPS, and then one that I've been following for a while, and I've posted up about it being a stock as a great harbinger in the industrial sector is Illinois Tool Work. But most importantly, let's take a look at the S&P 500. We've been talking about, and I wanted to bring this into focus to remind our clients. We talked about the indexes are closing in on a confluence of resistance between monthly and weekly person's pivot resistance target. That was what we wrote for this week coming in here. And what did we do with that analysis? We suggested that I am in the opinion we're going to encounter some profit taking on this rally, and we should see some follow through in the week. And if we do, then we get near that person's pivot resistance level as indicated below above. It'll give short-term counter trend traders an opportunity to scalp from the short side. Well, guess what? It's not a surprise there. In fact, you guys that are using the algo room noticed that yesterday we had some fabulous trades to the short side. This morning we had a fabulous trade to the short side. So the algo optimizer is doing a wonderful job in pointing out not just trades but profit taking, and I'll get to that in just a minute. What about the major markets? Well, this week we came in and looked at the advanced decline, of course, as I always do in my top-down approach, and most of the indices still look very healthy with the AD lines. But now, where are we going from here? Well, a couple things that I wrote about this week is really interesting about the overall market. We have the lowest volatile or intraday trading ranges in numerous markets. We saw it with the euro currency, and we've seen it. Euro currency, in fact, is at, you guys may not know this, but we're at a historic low of intraday trading ranges in the euro currency. It's like sub 50 on a 10-day ATR. What does that mean? It means the euro currency used to trade at 150, 140, 130 points a day. It's trading less than 50 ticks a day range. Soybeans generally have between a 15 and 20 cent range. They're trading at probably, I think it's about a 7-year low with about, now we're at back up to about a 9 cent range for the day. 9 cents in soybeans. Wow. So what does this suggest? It suggests that we're going to expand into a period of volatility, and probably S&Ps pretty soon. But as you notice right here, I say the E-mini S&P futures have been trading at about an 18.78 10-day ATR true range. So that's typically a lower historic reading. We normally see it around 26 to 30. There are extremes. October or back before the elections in 2016. You guys remember we were almost at like a 9.36 tick daily range for that time period. It was brutal for day traders because the market didn't have any movement. Then we went to December of 2018, just a few months ago. Remember, the market was crashing, and we hit nearly a 96 point intraday on average over 10-day period. 96 S&P points. And that's another brutal one for people because it's hard to manage your risk. And so when ATRs are down, usually people expand their position size to make more money. And when the volatility expands extreme levels like it did in December, we lower our position size so we can help manage our risks. And that's where we help balance trading systems and trading mechanics. Now we have a market, the overall S&P 500, all the way up here at these highs. What are we going to do? Well, this week I saw some opportunities in Expedia. Now, Celgene's probably not going to go very far, but I thought if we drop down into this zone on weakness in biotech one last time. By the way, Celgene's in a bid to be bought out by Bristol Myers, so it's kind of a deal in the works. So we're just trading a range. So I thought it would be a safe trade. That's what I'm trying to find, safe trades. And Biogen was another trade that we talked about in the trading room on Monday, but by the time I sent out the alerts and the newsletter, that 50% pullback, or the pullback to buy 50% of our position right here, while it did trade below that level, allowing the folks in the trading room to get in, it didn't help folks that aren't in the room because the email didn't go out. So therefore, I cannot take a position in something that I don't get alerted to. So it was a good call once again, but it never happened for us per se for the newsletter. How are we doing with the newsletter? Well, last week we dumped Kellogg's. We got stopped out of Marley, and I'm thankful for that small little stop right there. And with all of the positions that we've had so far this year, cumulatively speaking, not bad. Cumulative rate on our stock positions is at now 140%. So it I'm sure we can all do better. I get that, but boy, it's been and that's stock only. That is a heck of a year. And so the question begs, where are we going to go from here? And the last video I did, I talked about sector rotation. So the one sector that's not partaking in this rally, or had not partaken in this rally, has been healthcare and biotech. And so I'm going to switch screens here, and let's just go to our live trading room, which, by the way, I'll come back to the algo room in a second. I have a couple things here that maybe this may look familiar if you're in the live trading room. You'll notice I put up these green lines, which are my support targets. So first, I've got the IBB. We need to break out above this green line in the sand. So that's at about the 107.29 level. We need to see a 2-period close greater than that line in the sand, and that should help lift the markets. Now, if we get that, then we should also see a corresponding move in the LABU, or LABU is the leveraged ETF on biotech. So I'm going to maximize this. And you can see this gold line. That's a person's pivot, 3-week period, pivot point, moving average kind of thing. And we need the market to get back above that line in the sand. It hasn't done it yet. So we in fact can't barely get daily pivots above the weekly pivot. Now, what do I mean by that? These little pink dots are the daily pivots. This is the weekly pivot. Look at the last few weeks. Weekly pivot is lower, weekly pivot is lower, and the market trends down. So we're looking for a reversal. And where's it going to come from? The daily pivots will start trading above weekly pivot, and then it starts seeing corresponding price action making higher highs and higher lows. That sequence of events have not occurred yet. But I am hopeful about one item here. The volume is kind of showed a relative weakening condition when we dropped down, and we're starting to climb back up. The biotech sector, and at least looking at LABU, has not, or per se any which market you look at, we've gone from a kind of a nice trend, a consolidation. We broke down, and maybe you can see this green line, why it makes so much sense here, because it was like the bottom of the trading range that we crashed through, and now we need to get back above that to see liftoff. If we can see liftoff, and if we can get the volume levels, and now I know we got way too many lines here. Let me get rid of them. Yeah, I think that's a little clearer now. So we look at the biotech here, LABU, and it's the leveraged ETF on biotech once again. I look at both the ETF sector as well as the leveraged ETFs. So with that said, you can see we broke down, heavy selling. We went from 64 down to almost 44, 20 handle move in just a very short period of time, and not a whole lot of news either, right? It was just pretty much a little politicizing and maybe grandstanding again with the Democrat Bernie Sanders, presidential running candidate there, started to talk about how we need universal health care, and that really, they yanked the plug out of the market on this. They also yanked the plug out of United Healthcare, if you recall. Anyway, the moral of the story is, does this sector deserve to be down like it is? Is it being punished by, like, not just by poor earnings and companies not making money, or is it investors don't want to touch it, and therefore there's no momentum and there's no value increase? And I think it's the latter. People don't want to touch this yet. But if the smart money says, wait a minute, there's value here, we're starting to see, we all want to live longer. We all want better health care. We all want better drugs to keep us healthy. And guess what? Biotech's got some amazing cures out there, and the field is still very exciting. So therefore, I can't really say we should put this one in the back seat. What I am saying is, just like you see on this chart with my Thinkorswim layout here, I have the E-mini S&Ps, I've got the Qs, I got the Dow, I've got the Russell. Underneath the Russell is TNA. TNA, I've got what? KRE, biotech. It's all tied together. I'm focused on the bottom line is when I should be getting aggressively long on the Russell and the leveraged ETF instead of the Russell, TNA. And the secret is, if we can get a breakout in biotech, which we saw a nice recovery today, let's face it, if we can see follow-through strength in the biotech, if the regional banks don't crush themselves to death and trade back down, then those are the corresponding ETFs that's been weighing back and keeping the Russell down, in my humble opinion. So the key is, if we're looking for a clean opportunity in the Russell, if we're looking for a fabulous low risk, high probability with lots of upside, then it's in TNA. And so we want to make sure we get it right. Now, this is the regional bank ETF. And while it's stalled up here against these highs, and here's the stalling of the highs. If I can draw the darn trend line in, there you go. So here's the overall resistance. But if you just take a look at this little chart here, going back, well, um, for pretty much most of April, and again, it's a 1-hour chart. What do you kind of get the sense of? Higher highs, higher lows, but it's stalled against this resistance. Man, if we get, we're holding against this bottom support, and we've been trending and staying at this resistance for an awful long time. Boy, if we can break out of that resistance in the regional bank sector, it's trend, it's sideways consolidation, breakout. We had a little breakout in volume. The relative strength, according to my person's market catcher indicator, is showing that the relative strength in the regional bank space is doing well. It's holding up. So it's bright blue. That means it's outperforming relative to the overall S&P 500. So here's the catch. If the regional banks hold up, they don't lose ground. They hold their ground. And then if we get some upside potential out of this biotech, then we're going to see liftoff in the Russell. Let's look at this Russell real quick. And so it'll give you, I guess, an idea of why I'm focusing on the Russell. Many of you active traders would already have known that the Russell is nowhere near its September, October highs of last year. Here we are. So in order, just like the S&Ps, they are at their highs. The Russell has a long way to go. It has certainly a huge amount of potential. So that's why I'm focused in this. So I don't want to be premature. I don't want to be aggressively long, maybe have some light exposure, because what's going on here is, as you can see, we're not selling off. We're not selling off. And the volume looks, it's constructive. It's not fabulous. Constructive meaning it's making consecutive series of higher highs, higher low. It's sort of in an uptrend, whereas the index is not. So if we get a clear breakout over this 150, let's call it 159.5 level, a clear breakout would be, to me, a daily close greater than. But the secret is, once again, it's got to come from help from over here, the small cap biotech. Today, no joke, it did not help that XOP, the oil sector ETF, sold off. In fact, it was probably one of the top or worst performing sectors, energy, today. So, and that's a bit of confusion for lots of folks, because they see that the crude oil's up, and all year, man, the energy sector has like lagged. We did quite well earlier this month and took a profit in and were participated in the energy space with long positions in Hess. And if you follow me on Twitter, you probably have seen where we said, hey, we're booking some profits on this. And that was a nice trade to the upside. Over the last couple days, it's profit taking up here. So I can't say that energy's done and dead. I'm thinking this, folks. I'm thinking the next leg up is going to come from the Russell small cap growth, and it should be from support from energy, support from the small cap, and support from the biotech. That's what I'm still stalking. The markets generally will go to where you think they're going to go, but they hardly ever go when I expect them to go. So that's timing the market. So what I think is really important is that we stay focused on Labu. It did not help that today the overall market had some real crushing earnings from my friend ITW, which is Illinois Toolworks. And when I say crushing, I've been following Illinois Toolworks for quite some time. Since the beginning of the year, I've been telling everyone, if you want to know how strong the economy is, follow ITW. It has had good upside. Now, today's earnings didn't come out bad, but they didn't come out great. One of the things they did talk about, though, is that their car selling parts was really a problem, and yet they had great their business was doing better overseas, which is a surprise, by the way. So we did get a bounce off of the lows. It gapped lower. Volume trends were not healthy, but volume was starting decline. This is a momentum volume momentum indicator, and as you can see, it's starting to show as the price was going up in the last week and a half, the momentum was going down. That's an early warning signal. We wouldn't want to be in a trade that has declining momentum. Generally, it's a precursor that prices are going to decline. So what did go down today? Besides Illinois Toolworks, we had UPS. Well, you can clearly see, and I just want to focus in on the volume indicator, which looking at UPS, this is a massive, let's call it sideways trading range, but it broke down. What did the volume do ahead of this move? It went the momentum. You can see the histogram right here. The histogram moved lower. So proving a point that when we see stocks or prices going up and there's no strong volume behind them, it's something you want to take a profit on. And that's why we got out of that trade in Hess and as well as Noble Energy. What about 3M today? Unbelievable decline, right? That was just brutal. Once again, was there a sign or were there clues as this price was moving up? You tell me. As price was going up in 3M ahead of their earnings. Here's the uptrend. What's the momentum of the volume doing? It's going down, guys, right? I mean, you can clearly see even in the momentum indicator component, the histogram, it's right in there. It's going down. So here's a question. From this high and this high and this high, can you see, is that trending lower? It is. At that same corresponding levels in price, it's going up. That's what we call price volume divergence pattern. And that's what I look for if I'm going to be buying a product. I don't want to see that pattern. If I'm looking to get short, that's the kind of pattern that you want to look for. And again, the stronger or the longer the divergence builds, the more dramatic the potential sell-off can be. So that's pretty important observation. All right. Finally, we had INTC after the bell today. I mean, it's kind of the same story here. Intel's been climbing. It was kind of a neutral volume reading. The momentum, you can see the bars were starting to go down as the price is sitting up here. Intel didn't they beat, but they gave really poor guidance, and that might be because of the drop in the Apple Qualcomm lawsuit, right? So Intel's dropping their modem for 5G network, so that would be why they lowered their guidance. And then finally, Amazon. So we had some pretty interesting earnings. We had some big disappointments. Also, I wanted to point out IYT, transportation. You look at the transports, and part of this sector analysis, the top down I like to do, is I look at this and I go, wow, daily sell signal. This could be very bad for our overall market. And I look at like Union Pacific. Now, I've been talking about the rails making new highs for, well, since at least in January and February, we were pointing out, hey, look at how strong the rails are doing. And then, besides Union Pacific, we can go on and on. So what is the weakness? Well, UPS Logistics, the boys in brown, they had poor earnings today, but listen, they really didn't go up anyway. I mean, relative to where they are today, how much further did they're in a trading range. So I can't say that's horrible pattern. FDX, here's another situation. Horrible? Not really, didn't go anywhere. American Airlines. Wait a minute, John, you're switching into an airline. I am, because my subject is transportation. So American Airline didn't do anything. SAVE, Spirit, cheaper discount airline, had poor earnings, bounced off the low forms of doji, and then Love, Southwest Airline, LUV. Check that out. Had an upside move. I don't see. I mean, if I know the font might be small, but it's in a trading range. There's nothing going on. So here's the suggestion, folks. While transportation looks weak, with the rails still strong, maybe UPS weighed on it a little bit. Maybe some of the logistics companies weighs on it a little bit. But boy, the airlines, if they come back up, it's going to be that's going to be supportive. So the point that I want to make, and this is a key important suggestion, don't just look at the market and get an opinion you're bearish. Do more due diligence. We got to dig down deeper into these subsectors and say, what's really driving the index? What's really driving the market itself? Apart from one single stock event for earnings, it's kind of a different situation, right? But for the overall markets, can I get expressly bearish? This week I said, hey, if we get to monthly, weekly pivot resistance, short-term scalpers can sell against that number, and that's all you've been able to really do, right? It's not been a great, if you went short on the lows this morning, it hurt because the market came roaring back. Now I look at the technicals in the overall market, and I'd have to say, gee, here we are against the highs, and here we are against the old highs, and I'd have to tell you, looking at the market, do we have a potential double top? Well, it could be a double top. It could also be that the market kind of pauses in this trading range. I'll just put that elliptical tool up there, and then we'll wrap this up for you guys. But I think we have rising moving averages. I don't have a sell signal. I don't even have a lower low breakdown yet in the advanced decline, and the volume broke out supporting the move. I'm not too happy about this. This just suggests that, yeah, the momentum of the volume's weakened, so the market's at a pause. We're in an impasse. So I don't have a sell signal to say, hey, it's time to buy aggressive puts. I don't have that signal right now. I wish I did. I still have, because markets go down a lot faster than they go up. But even back in late September, early October, I mean, we rallied, we pulled back, we went up and tested the highs. And in how many days did we chop around in here before finally the big kahuna came? That's what everyone doesn't. I mean, it's funny. People don't remember that kind of thing. And if you notice, and I'll bring this into perspective if I can, in the advanced decline analysis back then, what it was going on, just like we don't have this yet. So what happened when we started to break down in the market right around in here? You'll notice that the advanced decline did what? It started to also break down. So it was already trending down. Volume was also forming a breakdown. Our volume pattern was breakdown. You know what? You don't have it here, and you certainly don't see it right now within the current advanced decline. So can I get expressly bearish yet? I would need at least a couple more days. Tomorrow's Friday, going into Monday. We'll see how the weekly markets wrap up, and then we'll take a look at it there. My guess is that we get a catch up in the Russell, and if I'm wrong, well, hell, we just wasted our time stalking the market. But if I'm right, then we have a huge potential for the Russell to finally catch up to its older upside resistance targets near 170. And so that's what I'm kind of looking and watchful for. And then with the understanding that we need participation in energy, small cap energy, we need the regional banks to hold up, but we need that biotech to move. Guess what? We got a really sharp potential for big movement coming in IWM. And if you don't want to take IWM, take the TNA. So that's what I'm kind of focused in on, friends, and I hope this helps shed some light on the market. Yeah, we had some nasty earnings after the bell, no doubt about it, but I'm kind of surprised, to say the least. Again, I'm surprised to say the least that the E-mini S&Ps are not down in after hours more than what they are. By the way, I told you I would share with you how the algo optimizer is doing. This morning it popped off immediately, a short position. It got out of half the position. The blue line represents the profit target. It scaled out, got out the other half here. Great trade. Then it got in. It got stopped out with a trailing stop function. Yeah, it left some money on the table. As you can see, the market went up from there. But overall, this has been a very dynamic tool that has helped us to. It went short there, took some profits off the table, got clipped for a small few ticks loser there, went short, got out, and then it doesn't take new trades after the close of the day. That's today's market action for the algo optimizer. It's just absolutely, like I said, absolutely clipped some nice trends in this market, and it's a very dynamic market. You all must agree to that. By the way, we'll go back and look at Tuesday's action, and you can see Tuesday. I hadn't had a chance to do an email or a video update for you guys, and one of the main reasons is, I was out in Denver and Colorado Springs, and then now I'm in Las Vegas. We're going to be talking to some folks over at a Thinkorswim users group, and then we'll be back in the office. We're back home Sunday. So this was a phenomenal algo optimizer. Long, gets out of half, trailed the stop, What more do you want out of a system, right? And even had a couple little tiny day trades in there along the way. So the algo optimizer, when I tell you it's done a really good job of helping to identify trends in the market, it really has. Lastly, and to wrap this up, here's the algo optimizer strategy that the our trading room participants get to watch. It generated a short here. It did stop out. Blue line means it's a small profit, and then volatility has spiked. My guess is we're going to probably go back up and test this high. If we don't take out the highs, I'm expecting another downside. Usually volatility, this VXXB goes down, it resets itself, and then it goes down. And I think that in everyone with the cause and concern of selling may go away, we're going to see some spikes in volatility along the way. There's no doubt about it. But until I get actual sell signals in the marketplace, I think that we still see maybe the volatility come back down into the lows. So we'll be watchful for sell-offs in volatility as we move forward. Thanks for watching, everyone. And again, if you liked what you see here, give a thumbs up or post a comment what else you would like to see us cover. This is just a quick wrap-up of the follow-through with where's the sector rotation? Is it coming in the biotech? And what effect will it have on the markets, and how has the overall market performed after some of these devastating earnings? And as you can see in the after hours market, not too bad with the ES. Thanks, everybody. Till our next time, I'll see you then.